Welcome to the Genius Factory. Enjoy the video.
In this video, I will explain how to make stock calls. First, understand that a call option gives you the right to buy a stock at a specific price, called the strike price, before a certain date. This is a powerful tool for profiting when you anticipate a stock's value will increase. We'll focus on a straightforward approach to identify potential opportunities and execute your first call option trade with confidence. To make effective stock calls, you need to grasp a few key terms. The strike price is the predetermined price at which you can buy the underlying stock. The expiration date is the final day you can exercise your right to purchase those shares. Finally, the premium is the price you pay to acquire the call option itself. Understanding these three elements is crucial for successful trading. For an easy method, first, identify a stock showing clear signs of upward momentum. Look for consistent positive news or strong technical indicators. Next, choose a strike price that is slightly out of the money, meaning it's a bit higher than the current stock price. This offers good leverage. Finally, select an expiration date at least 30 days in the future to give the stock time to move. Always prioritize risk management when making stock calls. Never invest more capital than you are comfortable losing, as options trading carries inherent risks. Consider setting a stop-loss order to automatically sell your option if it drops to a certain price, protecting your investment. Remember to check the description for a link to those fantastic leak-proof meal prep containers and other great deals. This helps you stay organized and prepared.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.